Hi, folks. This is Sean Hyman from The Logical Investor. I have this screen size for our chart, so I don't want to mess that up. But you can see part of my screen here on the Logical Investor site at SeanHyman.com. And I want to point out, if you want to know what my thoughts are on Bitcoin, I would encourage you to read this article that I just wrote recently on manias and euphorias. And click on that and you'll see the entire article. And then also, if you have an iPhone, we do have an iPhone app for the Logical Investor, so you can search for the Maven. There will be several of those, but you'll see the one that looks like a little key. And also, if you wonder about what I think on most any topic on your computer, you can go to the site and click on this little magnifying glass, click on that search field and type in a ticker symbol, type in the name of a stock, type in, whatever you wish. And if I've written something on it, you'll see it come up in that search. So that's an easy way to, if you're coming to the site and you're wondering, hey, I wonder if Sean said something about this or that or what have you. Because you would be surprised how much I comment on stuff on a daily basis, current news, events, economic things, chart formations and patterns, etc., in the fundamental and news section and the technical analysis section. And then I typically write a free blog each week. So even people who are followers who are not subscribers can access the free blog. They can access the Ask Sean section, my thoughts in the technical analysis and fundamental news section. And then, of course, premium members like you are the only ones that get the buy and sell recommendations, the full the newsletter, and the weekly videos. All right, and also if you something that's also free for people to view is the 6 Keys to Financial Success video series that I just did at a church recently. So I would encourage you to let your kids, grandkids hear it. There's 3 sessions there. The last one's a Q&A session. Anybody that that has financial difficulty, things of that sort, get them that free video, and I just believe it'll bless them. All right, so let's go on and talk about the markets, and we'll talk about our positions as well. So, so the market is, like I say, it sounds like a broken record, but excuse me, the market is grossly overbought, no doubt. You can see that here, and you can see how far the price is away from the 50 and 200-day moving average. So that's huge. It's one of the ways, even if you didn't know fundamentals, to know that the market has temporarily gotten ahead of itself. And especially when the price has spent a long time away from this 200-day moving average. We're also, you're seeing the RSI slump over, the MACD nearing a sell signal. So we could see, the first decent sized sell-off coming up pretty soon. Again, it's hard to say for sure, but there's a huge chance of it, particularly when now that we're looking on the weekly chart for the S&P 500, the price of the index is also very far away from its 50-week moving average and 200-week moving average. So, and it's abnormally far from that 200-week moving average. So, and look here, we're grossly overbought on the RSI. So the S&P 500 is in nosebleed territory, and it's one of the reasons why I've encouraged you to hold a lot of cash and to not have a lot of broad market exposure. And some people say, well, how much broad market exposure should I have to S&P 500 index funds and things that track the overall market? And my answer to that is however much you want to take the big dip along with the market. If you want 20% of your portfolio, 40, 60% of your portfolio to dip along with it, or if you want 0%, whatever you think. Now, keep in mind that I don't normally encourage massive cash positions, meaning like a ton of your portfolio percentage-wise being in cash normally. But when you get to periods where where the PEs are historically high and they're at previous crash levels, if there's ever a time to hold at abnormal amount of cash, it's during those times. So the thoughts that I'm saying today are not the thoughts that you'll always hear me say. Now, granted, your average retail investor, which is your mom and pop investors, everyday people, they generally do not hold enough cash in their portfolios anytime, in good markets, bad markets, good times, bad times, whatever. So, and it will, one of the biggest differences between institutions and retail investors are that institutions hold more cash and they value it because it gives them averaging down opportunities and opportunities to get into new stocks that they don't currently own when the opportunity presents itself, which is at low valuations on very solid stocks. And the retail investor is typically emotionally led, and they watch every wiggle in the market. And while the pro watches every wiggle in the market because it's their job, they're paid to do so, they have been watching those wiggles in the markets for 20, 30, 40 years. And so they're going to act more logically, not emotionally. So anyway, with all that said, let's go into our positions. As you can tell, with the S&P 500 having a huge risk of downside and the dollar still being weak as well, this is all good for gold. I have no idea what that sound was. I don't know if that was that ad that just came through on the page or what. So anyway, so with a weak dollar and overvalued markets, GLD is poised to head higher. So here was a minor A, B, C, and then here's a major A, B, and then C. And so far we're seeing higher lows as well, a low here, a higher major low here, a higher major low here. This was in the 114s, this was in the 117s. We're oversold and coming out of that. Selling volumes continuing to die off, and we're close to another MACD buy signal. So GLD is looking good on a long-term chart. On the weekly, GLD has already completed its A, B, C, which I believe ended right here in coming in the last of 2015. And here's your first high, major three-way pullback, first major high or low. So here was your ultimate low at 100, next higher low at 107, and then here's the successive higher lows before since then. The price is hovering around where the 50 and 200 week moving averages converge, which will likely be a strong area of support more than likely. RSI is still heading up. MACD is probably close to another buy signal, and look at the selling volume. It's a little more easy to see here. You can see the selling volume dying off. So GLD looks good, both near term and long term. Then we've got CHL. So CHL, I said, had some support at 50 and some support at 48. Since we bought this in the portfolio at 50.67, and I know your price may vary from that, maybe a little higher, a little lower, but 50-ish. Dropping a couple of bucks isn't worth averaging down. Sometimes people say, well, when should I average down? When the average break-even price can be brought down enough to make a sizable percentage difference. So, for instance, let's just use round numbers. If I bought at 50 and it drops to 48, well, if I bought again at 48, my average cost is only 49. So I've only brought the average break-even price down $1 off a $50 stock, so that's very little percentage-wise difference. So that's why I say, and in the last weekly video, I gave suggestions on averaging down points if areas were broken down. So I would encourage you to go back and read that as well, or listen to that as well. So the price would need to drop significantly enough for an averaging down point. That may happen, that may not happen. The market will tell us that, but The good thing is that we've got a solid stock that's cheap PE, $200 billion company, so that if it does on the weekly chart drop back significantly, then you get your averaging down point, which will give you a higher long-term percentage gain. Or if the 48s here, if they're simply the bottom, and then it bounces from here and takes off and heads up overall, then you just get a quicker gain. So either way, it's not a bad thing. So again, you have win-win scenarios when you have the ability to average down and you're holding very huge solid assets. Okay, next one. FXB. FXB, we're already up marginally on. We got into this one in the 128s, 128.96. You might as well say almost 129, and it's at 130.56. So we're in the early stages of being profitable on it. It might drop back a little bit near term, or it might take off near term. Again, the market determines the near term wiggles. There's not always a reason behind every near term wiggle in the market. When you turn on the financial TV networks, they always seem to find a reason that seems right or logical for every little wiggle in the market. But there's just simply not always a reason for every little move up or move down on an intraday or daily basis. Long term, there's reasons for those moves. Those are fundamental in nature. But it's sometimes hilarious when they talk about why the market moved up or why the market moved down. And sometimes there are definable catalysts. I'm not saying there never is. If North Korea fires off a missile, and it's pretty definite, and the markets react to it, that's easy to pinpoint. Or there's certain things that can happen. So I'm not saying it never happens, but sometimes they feel the compulsion to come up with every single day the reason why the market went up or the market went down. And the market is going to gyrate up and down on its way up in stocks or ETFs, and also the same thing when it's in a downtrend. It's going to fluctuate up and down on its way down. So to say that there's a reason for every move up and a reason for every move down within a larger trend is just a little silly, when by nature all stocks move up and down on their way up, and they move up and down on their way down. It's like the waves of the ocean. They're just always going to be. So anyway, with that said, we're getting into a lot of buying into FXB. You can see this growing, and the selling has recently dropped. MACD is heading higher. This is likely going to flip back into a buy signal. You've got your bullish crossover here. 50 and 200-day moving average is rising, RSI rising. So FXB is looking good on its daily, which gives you probably the clearest picture. And then the downtrend has been broken right in here, middle of the year. And then it bottoms back, basically you could say somewhere between, you could argue between, late part of last year to early part of this year. Everybody and their mama dumps it here, which is middle of last year, and it bottoms in the months that follow. All the sellers are washed out. Look at how big the selling volume spike is compared to average weekly trading volume on it. So I'm looking for this to head up to the 200 week moving average. I believe it should have no problem eventually going to the 160s, 170 area in time as well, once it's finally able to overcome this. But that's where we're headed next for FXB. Just real quick on GLD, once GLD breaks above the, I'll call it the 131 area, because you got 128 here, 131 here, 125 here. You've got 133 here and 137 here, but these are so far back in years that they're not near as crucial as some of these other ones. So once it breaks above 131, we'll see a lot more momentum. Investors come into that. and this could easily go back towards its old highs of 174 to 185, that area, quite easily. So we've looked at China Mobile, we've looked at FXB, and we've looked at GLD. With CHL, there's no reason why this can't go back, to the 60s. I mean, it's been as high as 67 here. If you just chart a little upper channel line where it connects most of the highs, taking out the anomaly back here, you'd come up into the 62 to 65 area. And the further this goes in the future, the further that would go up. So, this could easily go 62 to 67 quite easily. So this has got quite a bit of upside as well. And then we've got FL, which we have not triggered a trade in. There is basically a buy order out there, so you should have limit orders in. If this goes, or you can watch it and just, as it goes below the price, you can enter it with a market order. Either way you want to do it, I don't have a preference. So we were buying this one at 36 or under. This one bounced up since the recommendation, and I believe we'll retrace some of that. Rarely, if ever, does something just V-bottom and go up and not look back. It usually comes back and retests these lows, meaning that it doesn't have to come back to these lows, but it'll usually come back to the vicinity of those lows. So the 35-36 area should be very realistic. I do believe we have seen a large A, B, C correction here. This is likely the bottom. It's too early to say if it's for sure the bottom because we haven't seen a higher low yet that's held. But look at the massive selling that came here relative to what's average. So massive selling here. So if we haven't hit the bottom, we likely will in the months to come. And then coupled after that, right behind it came big, massive buying spikes. So the institutions came in. How do we know it's institutional buying? One, by the mere size of it, and two, institutions are the ones that are brave enough to go in there and scoop up values when the average retail investor wouldn't dare do it without, proper coaching from somebody like me or somebody else that's been doing this quite a long time. So FL on the daily, again has broken this downtrend, broken above the 50-day moving average, which is now rising. The buying volume has definitely picked up. The selling volume dropped down. Here's that big selling spike that I talked about. So this big selling spike around the 31s. That's why this 28 could be the bottom because it's been a few months since then. But again, a little too early to tell for sure. But I think, if I were a betting guy, I would think it is. But again, we don't know for sure. Like I say, even if it's not, we've got averaging down opportunities if it goes lower than that into new lows. So that's totally fine. But we won't trigger into this one until it gets to at least the 36 area or below. And I'm looking for that to turn lower fairly soon. It's had this run up towards its 200-day moving average. You can see the RSI peaked and put in a lower high here, then put in a lower high here and slumping over. The MACD's on basically a sell signal. So we should see this retreat back to the rising moving average. Doesn't have to come all the way to it. Sometimes it can come a little shy of it. Sometimes it'll come to it. Sometimes it'll come past it. It's hard to say. There's a good chance that there's a lot of volatility, being that we're in a bottoming process here. So this could definitely jolt lower very easily. So that would help trigger our buy. Again, this is one of the more solid retail stocks. If you look at FL, $5 billion company, which is not huge, but it's not terribly small. Forward PE in the 10s, trailing PE in the 11s. Profit margins are a little higher than many. You'd be surprised how many stores operate off of 2 to 4% profit margins. They just do a ton of volume. Earnings, they're in $1 billion, which again is huge for a $5 billion company, and also shows that that market cap is likely way too low. And so that means the stock price will likely rise in time to reflect that. The cash is close to $1 billion, and then their total debt a mere 126 million, so almost non-existent relative to their size. So that's one of the big reasons why, if I was going to bet on retail, so to speak, and I use that term bet loosely because you're not, it's not a gamble when you're dealing with a stock that has low debt, high cash, decent profit margins for the industry, etc. And we've likely seen a technical turn. So this thing got thrashed from 77, down to 28, and it's got its first volatile bump up. So once we get triggered here, this could easily come back. If this comes back just to its 200-week moving average here around the 56s, we would make good money on it. So this doesn't have to go back to new highs or all-time highs or anything like that. All it's got to do is get a decent bump up in reaction to the 50 to 56 level, and then we've made a good profit. So we're continuing to grow in number of subscribers and a number of followers, but I would urge you to feel a little bit of the weight of helping me grow the site, because I know that you are believers in this message. You are believers in this methodology of a saner way to invest, a very methodical way to invest. So help me spread the word on that, because a lot of people invest the wrong way, so emotional, so reckless. They're really led forth by their greed and their speculation, and they're taking on much higher risk than they ever realize. So I would just encourage you to help me spread the word. Put SeanHyman.com on your Facebook pages. Click on the Facebook icons on the articles and share the articles on your Facebook and Twitter and LinkedIn and Google Plus pages and things of that sort, if you would. And I would just so greatly appreciate it. Thank you so much for being loyal subscribers. I thank you so much for it. I pray this has been a blessing to you. And God bless. Bye-bye.